for the audience. We ran into some technical issues. So finally we're back. And Graeme already jumped to the intro while I was solving the technical issues. So thank you guys so much for joining today. I see we already have 4K viewers on the Binance Live, and today we're also streaming on the Binance official YouTube channel and the Polymesh YouTube channel. So do let us know in the comments or the chat box. Let us know where you're streaming from, and let us know what time zone you're in, what country you're from, what time zone you're in, what time is it for you. And it's so good to see you all. I see a lot of familiar faces, familiar user IDs. We have a lot of very, very loyal fans. So once again, welcome everyone to another Binance Earn AMA. Today we're very excited to have Graeme Moore from Polymesh on. So hey Graeme, do you want to, so I know you already done the quick intro before, so do you want to do one more intro for the Binance Live audience?
Yeah, happy to do so. So thanks, Larry. Hey, everybody, I'm Graeme Moore. I'm the head of tokenization at Polymesh. So personally, what we do at Polymesh is everything to do with security tokens. So Polymesh is a layer 1 blockchain for security tokens. Security tokens, if you don't know, are financial securities on a blockchain. So things like stocks, bonds, derivatives, fractional ownership of real estate, all that good stuff. We've built a layer 1 blockchain to make that possible. So things focused on compliance. How can you easily create one of these assets? How can people trade these assets? How can institutions onboard into the world of blockchain with their regulated assets like stocks, bonds, derivatives, real estate, etc.
Awesome. Yeah, so for today, thanks so much for the intro, Graeme. So for today, the agenda will be very similar to what we've done in the past. Today we'll have, first, we've already collected a lot of questions from the Binance Twitter. So we've already collected, had a survey out. You can find the survey in the description below. We're also very excited to have a $5,000 worth of POLYX giveaway for today's AMA. Already $1,000 will be allocated to the questions that have been chosen in the pre-collected questions section. So for those, thank you guys so much for those who have already submitted the questions beforehand, before the AMA. And we'll pick some of them today and we'll address them in the Q&A section. And then after that, first of all, we'll have Graeme also do a quick introduction for Polymesh and probably the predecessor Polymath. And then after that, we'll go into the pre-collected questions where we'll go through some of the users' questions. And then we'll move into the live QA, where I think a lot of users are already very familiar. So you during the AMA post, you can put into the chat box quality questions, and then at the end, we will pick quality questions. And for those users that have been chosen, you will be given $20 worth of POLYX within 30 days. And the terms and conditions are in the survey, which is in the link in the description. So be aware of scammers and spammers in the chat box. And for those spammers, please do not spam and do not copy other people's questions. You will be banned from the giveaways. So with that out of the way, and then at the end, at the final end, we'll also have a prize quiz session. So everybody do listen attentively to the conversation today, to the key takeaways. Of course, I will have a short presentation at the end to walk you through all of it. But yeah, I think that's about it. With that out of the way, Graeme, would you like to do a quick introduction for Polymesh?
Yeah. So as we were talking about, right, Polymesh for security tokens, it's a layer 1 blockchain. In terms of how Polymesh got started, so back in 2017, there was a company called Polymath. So I joined Polymath as the first employee back in 2017. And what we were focused on as well was security tokens. So we saw utility tokens being created. We saw people creating tokens mostly on Ethereum with the ERC-20 standard. And we said, okay, well, a lot of people are going to start wanting to create actual real financial assets. So stocks, bonds, derivatives, etc. And people couldn't really do it back then. So they couldn't do it with ERC-20 because ERC-20 was very simple. And so to create a token on Ethereum, you have the ERC-20 standard. It's got 6 functions, very basic. I can send and receive and store this asset. That doesn't work in the world of financial securities where you have to have things like compliance infrastructure. So only having certain accounts that are able to hold the asset, potentially only trading during certain periods. What happens when you want to make a dividend payment? What happens when you have to have a shareholder vote? What happens with all of that kind of stuff in the world of securities? There's a lot of nuances involved. So back at Polymath, we started spearheading something called ERC 1400. So that was a standard for security tokens that extended ERC-20 into the world of securities and regulated assets. So again, doing things like ensuring that only party A and party B are able to transact because the issuer of the asset or their broker dealer or their transfer agent or whoever has given them the ability to do that. So all that kind of infrastructure we started building on Ethereum back in the day. There were over 200 security tokens that got created with that. The government of Norway started using ERC 1400. Consensus, which is the largest dev shop on Ethereum, started using ERC 1400. SocGen, which is one of the largest banks in the world, they announced the CAST framework, which is built on ERC 1400. BNP, the 9th largest bank in the world, started using ERC 1400 for proof of concept and a few other initiatives. And so we were getting some really good traction with institutions using ERC 1400 for financial securities, but it wasn't really what we envisioned it to be. We think this is trillions of dollars in assets that are going to migrate from legacy infrastructure over to blockchains. And we just weren't seeing the uptake that we thought we should. And so as we started talking to more and more of these institutions, we started learning, okay, they actually don't like Ethereum for regulated assets. We boiled it down to 5 key pillars, we call them. And we're going to get into that in a bit when we start talking about some of the questions that I've seen Larry showed me. So I'll leave that for that period. But the idea is banks didn't like Ethereum for regulated assets. So we said, okay, well, if they don't like that, let's build a blockchain, a layer 1 blockchain just for them. Just for the world's largest financial institutions, just hyper targeted for security tokens, where everyone can have the ability and have the confidence to want to create a security token, manage a security token, and have investors hold that asset. So we started building Polymesh back in 2019. We launched it almost exactly a year ago. The end of October was the Genesis block for Polymesh, and we've seen a lot of uptake since then. So we'll get into that in the AMA questions. But yeah, layer 1 blockchain for security tokens. We've seen a lot of uptake for the world's largest institutions that want to get into the world of blockchain and regulated assets.
Awesome. Thank you for that amazing intro. All right, so now that we have the project intro, let's go into the pre-collected questions. So we've already collected some of the questions from the users. Let's start with the first one. So you guys can see you'll be able to see the questions underneath. So first is from 120 Doe. Congratulations. So the question is, how does POLYX work and what is the main purpose?
Yeah, so in terms of POLYX, POLYX is the native protocol token of Polymesh. So BTC to Bitcoin, ETH to Ethereum, POLYX to Polymesh. So if you want to create transactions, if you want to send POLYX, if you want to send a security token, you need to pay a transaction fee in POLYX on the Polymesh chain. POLYX is also what secures the proof of stake Polymesh blockchain. So if you want to earn staking rewards on Polymesh, you would have POLYX, you stake that POLYX, and you earn staking rewards for securing the chain that way. So in terms of the main purpose, we touched on that a bit in the introduction. The main purpose of POLYX is to secure the chain. And then the main purpose of Polymesh itself is to create this infrastructure where institutions, banks, custodians, broker-dealers, and ultimately end investors as well are comfortable using blockchain to create, manage, and invest in security tokens. So we've been on this since 2017. So really at Polymath back in the day, we were one of the first companies that built any of this infrastructure. We built the first point and click interface so that someone could create and manage a security token. We spearheaded ERC 1400, as I mentioned. And then I think we built the best layer 1 infrastructure for security tokens now with Polymesh.
So just going a bit off script here. So I was wondering, could you highlight again like the difference between Polymath and Polymesh, and then like in terms of like with Polymesh, trying to solve the security tokens problem, is there like are you trying to become like a security exchange, like something like NASDAQ, or what's like the Web 2 version of Polymesh that you're trying to solve?
Got it. Yeah, for sure. So in terms of Polymath and Polymesh, so Polymath was a company that started building technology for security tokens, recognized the need for a layer 1 blockchain, and so they started building Polymesh. And then what happened last year is a few of us from Polymath actually went over and we created the Polymesh Association. So it's a Swiss not-for-profit association where its pure job is to grow the ecosystem of Polymesh. So now all of that IP and whatnot is housed inside the Polymesh Association. And Polymath just sits as one application now on top of Polymesh. So Polymath is one application where users could go through. They could say, hey, I want to go raise $5 million for my equity, or I want to issue a $100 million bond. Polymath gives them an interface to do that very easily, with Polymesh as the back-end blockchain that's storing all that information and processing those transactions. And then the other question in terms of, what was the other question? The second question later?
No. So I'll just jump in real quick. So Polymath is like the application on Polymesh. And before Polymath lived on Ethereum, but there were restrictions you mentioned, like financial institutions or traditional institutions weren't very ready to use Ethereum as the blockchain. So you created Polymesh as the the blockchain for these institutions to invest in. And then the second question was, what was the Web 2 version of Polymath and Polymesh?
Yeah, so in terms of, I think you mentioned NASDAQ. NASDAQ, the New York Stock Exchange, et cetera. That's not what Polymesh is. Polymesh would be more of the base layer infrastructure for those kinds of entities. So how does NASDAQ and the New York Stock Exchange process trades? They have their own internal mechanisms that do that. They have a bunch of technology layers that do that. So Polymesh is one layer that they could use, so they could essentially sit on top of Polymesh in order to manage trades, create assets, manage assets on an ongoing basis where investors could onboard. And so really Polymesh sits in the background of these transactions, and it's the record of truth, the golden source of truth of who has what amount of this token. Do I have 10 shares of Apple or do I have 20 shares? Well, Polymesh is where all of those records are being stored. And that's essentially how we view that going forward. There's one company building on Polymesh right now. It's called Tokenize. So they're a broker dealer, a transfer agent. They're a broker dealer, an exchange, and a CSD. Broker dealer, exchange, and CSD. And so they sit on top of Polymesh. And so all of that regulated stuff. A CSD is a central securities depository. So something that exists in essentially every exchange. The CSD is the very highly regulated entity where the securities actually sit. And so they're who, the SEC or the OSC or whatever country you're in, they're where the regulator would go to say, okay, where are the securities, who's keeping track of them, who knows what's going on with all this kind of stuff. And so that infrastructure, that very highly regulated infrastructure, sits on top of Polymesh, and Polymesh is where things get kept track of. So just to give you an idea, very similar, Tokenize, similar to NASDAQ or New York Stock Exchange in the same way they have all of those licenses. They're the venue where people go to trade. Polymesh sits as a layer below them. They sit on top of Polymesh, and that's how that interaction works.
Got it. Yeah, I have a few more questions, but I'll go through these ones and see if they can answer my questions. Thanks so much for letting me go off track there. All right. So the second question is from Fiji. Sorry, I don't know how to pronounce this. Fiji Roll. So the question is, what makes Polymesh unique, I guess, in terms of like the other layer ones?
Yeah, I think Polymesh is very unique in that it's purpose built for security tokens. So Ethereum is general purpose. It's all things to all people. If I want to even build security tokens on Ethereum, I can sort of. If I want to build a social media application that sits on top of Ethereum, I can. Same thing, Binance Smart Chain. If I want to do anything, I can do that on Binance Smart Chain as well. For Polymesh, we looked at that and we said, okay, well, all these banks, all these institutions are telling us for this specific, very highly regulated aspect and use case, they want something that's tailored to that use case. And so we started building Polymesh with that in mind. So I mentioned there were 5 key pillars that we boiled down to in terms of why we needed to build our own layer 1. The first one is governance. So if there's a chain split on something like Ethereum or Binance Smart Chain, I could have $100 million asset on the chain before the split. Then after the split, there's now 2 chains that each have a reference to that $100 million asset. And so for companies, that's a really big question mark. Which chain has the actual claim to the underlying assets? Do we have to take a shareholder vote to decide, do we support ETH proof of work or ETH proof of stake? Do we have to talk to our board of directors? Do we have to pause trading for 3 months to see which chain the community supports more? So those kinds of questions just really don't work in the world of securities, where there's constant trading instantaneously, and governance around securities is really important. So on Polymesh, there's always one canonical version of the chain. So you can be rest assured, if there's some type of upgrade or whatnot, you always know which is the real chain, which is the real token sitting on the chain, and which one has the real claim to the underlying assets. So that's very, very important. The second one is identity. So on Polymesh, you actually have to pass a KYC process to use the chain. So again, fundamentally different from almost every other public blockchain that exists, where on Ethereum, on Binance Smart Chain, anyone can onboard, anybody can build anything they want. Whereas on Polymesh, again, we talked to the world's largest financial institutions, and they were very concerned about that, and very concerned, especially when you start getting into who are the node operators of the blockchain. So on Polymesh, all the node operators are financially regulated entities. And so again, when you start talking to large banks and they go, okay, if I'm JP Morgan and I make $100 million trade with Goldman Sachs, where do I pay the fees to make that trade? And if you make that trade on chain, you might pay, $5, $10, whatever it is. That might go to a miner in North Korea. And so that's a very big issue for them. And so what we said at Polymesh is, okay, well, let's just get rid of that issue completely. And let's have all of the node operators that are managing blocks and creating blocks and securing the chain. Let's have all node operators be known entities. And so we require that they have some type of financial license today. And the idea there is, okay, you're paying your 5 cents in fees, 10 cents in fees. They aren't going to North Korea. They're going to one of these entities. Look at these entities. Are you able to trust these? And do you feel comfortable with interacting with them? Just giving, again, all about giving institutions comfort with the blockchain. The third thing is compliance. So again, we started as really the first company building any kind of compliance infrastructure on blockchains back as Polymath with the ERC 1400. And we kept hitting limits with the Ethereum architecture. And the reason was everything was a smart contract talking to a smart contract, talking to a smart contract. It's not a very scalable way to build a system, in our opinion. And so what we did is we took a lot of those smart contracts and a lot of that functionality and actually baked it into the base layer of Polymesh itself. So the Polymesh base layer blockchain, without needing any smart contracts, understands token creation, token management, things like compliance. So having that in place is really, really elegant and much more scalable in terms of a solution. So without smart contracts today, you can create and manage an asset on Polymesh in a very standardized way. So again, just how can we hyper target a blockchain for one use case and make it the best blockchain possible? Whereas every other blockchain is trying to be all things to all people, which can work, but it's never going to be the best solution for the one use case. The fourth thing that we like to talk about, the fourth key pillar, confidentiality. So we have a patent pending process called Mercat, which we hope to implement soon, where you can actually obfuscate some of the data when you're making a security token trade. So you could hide essentially things like price of an asset or amount of an asset. So again, talking to institutions, saying, what do you guys need? And for that, for them, that's a very important endeavor as well. And then finally, settlement is a huge one. So on Polymesh, we have a concept where all parties must affirm settlement instructions before a trade can be executed. So on something like Ethereum, Binance Smart Chain, et cetera, and I'm not disparaging Binance Smart Chain or anything, Larry, I hope you know that, but just for securities specifically, it's very important that both parties affirm settlement instructions. So when we're on something like Ethereum, if I find out your address on Ethereum, I can send you any tokens I want, and you can't say no. That's a big problem for institutions. So for example, when Visa bought a CryptoPunk, I sent them some tokens. A ton of people sent Visa some tokens. Does Visa now have all of those on their balance sheet? Do they have to report that, in their annual shareholder meetings? Yes, we have this NFT, with maybe an explicit photo on it. Is that on Visa's balance sheet now? And so on Polymesh, we said, okay, that makes no sense. That's not what institutions are used to. So we're going to require that not only the sender has to affirm settlement instructions, but the receiver also has to affirm settlement instructions, and only then can a trade take place. So those are the 5 key pillars that we like to talk about for Polymesh. We think that's what makes Polymesh very unique and specific for security tokens.
Yeah, that's super interesting. I think the last point also recently with, not recently, like a few months ago with the thing with Tornado Cash, right? So once people got to know like who has which addresses belongs to which celebrities, I forgot what that term, I think it was dusting, right? So
dusting, yeah.
People send like 0.1 ETH. So for some context for the audience, so OFAC sanctioned a protocol called Tornado Cash. So it's like a crypto mixer, right? So Graeme, feel free to jump in to help add any info.
Yeah, this is a great point to talk about. So Tornado Cash, I could send some ETH into Tornado Cash. It spins it around and mixes it with other transactions, and then hopefully I get clean ETH at the end of it. But what I don't know if it's the DOJ or something, some U.S. regulatory body or entity said, what, Tornado Cash, we don't like it. We're going to sanction Tornado Cash, and so anybody who's interacted with Tornado Cash is now on our bad list essentially, and people shouldn't interact with them. They might be criminals, they might be terrorists. So people get wind of this, and then they go, okay, well, I know what Jimmy Fallon's ETH address is, so people send ETH into Tornado Cash, spin it around, and then they just send it to Jimmy Fallon. So now is Jimmy Fallon a terrorist? Is Jimmy Fallon on a sanction list? And so just a huge question mark. They haven't really said what they're going to do about that. They've essentially said, Jimmy Fallon is now a terrorist or something. And so what we've said is, well, let's just get rid of that issue completely. Let's require that Jimmy Fallon has to say, yes, I want to receive this transaction. Let's require that, Bank of America, JP Morgan, whoever actually has to say, yes, I want to receive this transaction. And so that's, again, a huge thing about giving comfort to these institutions where they can deal with finance in the way that they've done it for the last 50, 100 years.
Yeah. So another way, another great example on, how affirmation on a blockchain for transactions could be very beneficial, especially when it's for the use case for financial institutions. But yeah, I think they also had implemented they also announced that with dusting funds, as long as you can prove it, that you receive dusting funds, you're not sanctioned. Otherwise, it would just be nonsense. But yeah, moving on to the next question. Oh, sorry, I went to the last one. To the next one. All right. So Flop6, congrats on your question being chosen. The question is, can you explain how security tokens work and some of the advantages in using them?
Yeah, definitely. So in terms of how they work, it's very similar to how you might be familiar with how utility tokens work. But it's a actual financial security that represents some underlying asset. So maybe that's a stock, maybe that's a bond, maybe that's a revenue share agreement, maybe it's a piece of a building somewhere. And so an actual financial security that exists on a blockchain. And so in terms of how it works, they're really easy to set up. On Polymesh, we've made it very, very simple. You can go click buttons. You don't even have to be a developer. You can go create an asset. You can go manage an asset. You can say, okay, here are my pool of 50 investors that I've KYC'd or that I know personally. And they're the only pool that's able to trade in this asset. And so in making it really easy to set security tokens up, you almost don't even need to understand exactly how they work, kind of under the hood. We've made it so simple that even a non-developer can go click buttons and create one of these things. In terms of the advantages, I like talking about 3 things, EAT. First one is efficiency. So over the legacy world, efficiency is really big for security tokens, especially when you're talking about private markets. So most people are familiar with public markets for securities. That's the New York Stock Exchange, that's the NASDAQ, that's the Hong Kong Exchange. And people are familiar with, I sign up with an account with a brokerage and I go trade these things. But most of the world's assets are actually in private markets. And private markets are really, really important for actually making the world run. Your small business that you see on the corner, a company that could be even worth, 100 million, $1 billion, $10 billion might be private. It might not have publicly traded stock. And so how do you keep track of those stocks? How do you keep track of the trillions and trillions of dollars of bonds that exist? The problem is that today it exists on legacy infrastructure. And a lot of people even have their shares for their company, maybe a debt issuance that they've done. It might be a literal piece of paper that exists in a filing cabinet somewhere. And so what we've said is that makes no sense in the world of the internet, and especially in the world of blockchains, where now what we can do is we can upgrade the legacy infrastructure, and we can have a blockchain that exists where now your token on a blockchain actually represents that $10 million bond or whatever the case may be. And so efficiency is a huge one there. You can just imagine, the difference between being able to trade this by clicking a button, being connected to some website somewhere versus having to go to a lawyer's office, sign the documents with a piece of paper, move the papers from one office to another, having to phone people. Having to phone people doesn't really make any sense anymore, especially when you have blockchains. We don't have to do that kind of stuff. So having Polymesh there to upgrade the legacy infrastructure and make things more efficient is a huge one. Next one is automation. So now that everything is digital, with security tokens, we can automate a lot of things, and we can actually do things that weren't possible before. So not only can we automate a lot of the compliance infrastructure, where in the past there might have to be an actual human being saying, yes, this trade is approved. No, this trade is not approved. Yes, this trade is approved. Yes, this trade is approved. Now we can just automate that so that the blockchain can tell with the compliance criteria, okay, should this trade be allowed? And actually the blockchain just goes, yes, no, yes, yes, no. And so that makes things a lot easier. But then what you could do on top of that are cool things like, one thing that I love is potentially automating dividend payments. So what you could theoretically build with blockchains and with security tokens and with Polymesh is something where you take in some real world data to say, okay, when my company earns $100 million in revenue, I'm going to automatically pay out a dividend of $1 million to my token holders. So you can't really do that in the legacy world. There's pieces of paper, there's phone calls that need to be made, there's manual approvals, but you could actually automate all of this stuff. So that starts to get really cool, and you start to get into this new world of new asset classes that weren't previously possible. And then finally, transparency is a big one. So again, especially in the world of private markets, transparency is not always there. I might think that I have 50 shares of this company because I signed a document 8 years ago. But then I find out actually there were some restructurings that got done. I actually approved some shareholder memorandum that I sort of forgot about because it was in my email, and I just pressed, yeah, sure, sounds good. Now I actually have 40 shares. So I have 10 shares different than what I thought. But in the world of blockchains, I just go look at the chain and I see, okay, yes, I have 50 tokens or I have 40 tokens. There's a lot less up for dispute when you are using a public blockchain where everyone at any time can audit and go, okay, what's the current state of the world? Who owns what? And so having that transparency is really big, and it's also really big for regulators. So there's this common misconception in the world of security tokens specifically, where people go, oh, well, regulators don't like blockchain. Regulators don't like crypto. That's not really true. It really depends on what regulator you're talking about, what specific mechanism you're talking about. And for security tokens, regulators actually really like them. If you're a regulator, what would you prefer to preside over? What would you prefer to try to figure out? Pieces of paper in filing cabinets or a publicly auditable blockchain where you can see every transaction that's happening? So regulators actually really prefer this concept where markets are actually open and publicly verifiable in real time to anyone, rather than this closed system where people are making deals behind closed rooms, and there's actual pieces of paper and closed ecosystems that regulators don't necessarily have real-time access into.
Yeah. So I think one of the questions I had regarding that is that so the companies were like different, so first off, is this particularly for a certain jurisdiction? So what kind of, like, for this to happen, right, for traditional securities to become tokenized, is there any like blockers or like regulations that has to take place where you have to go through, be recognized by the SEC or something like that in order for it to be realized?
Yeah, so there's actually no real blockers that exist. So people have done public offerings in the US, people have done private offerings really all around the world with security tokens. The regulators generally don't care in terms of what is your security represented by. Of course, it depends on certain jurisdictions. Somewhere they're just no blockchains, but I think that's really just sort of China today, and that's actually changing a lot. It's actually changed a lot in the past little bit. But for a lot of regulators, what they care about is function over form. So function being, what does this thing do? How is this thing managed? Form being, what is the specific technology you're using? So the example I usually use here is if my security, if the stock in my company is written on a napkin, the regulator doesn't really care. If I say, John owns 10 shares in my company and I wrote it down on a napkin, as long as it's enforceable and, maybe they sign their name, I sign my name, maybe a witness signed their name, regulator doesn't care if it's that or a piece of paper or a PDF document or sitting on a blockchain as a token. The regulator cares, are you able to enforce the necessary regulations that we have imposed upon you for this specific security and this specific offering type? So there's no real blockers to use security tokens from that respect. What I would say in terms of regulation and what I'd want to see is loosening regulations for security tokens. So one thing that I think currently could be done is something like we talked about the CSD before. You don't really need the CSD in the world of security tokens. The blockchain is the CSD. In terms of always requiring a transfer agent for a public offering, and even sometimes in certain private markets, some regulators always require a transfer agent. The blockchain can be the transfer agent. The issuing company can be the transfer agent, and then just go look at the blockchain regulator. You can see what's going on. You can see we have the controls to only allow people in these jurisdictions to participate. We've implemented this compliance criteria that you need. We don't need a transfer agent. So almost security tokens, because we can automate a lot of this compliance functionality, they should be subject to lessened requirements than existing legacy infrastructure because regulators can see all that stuff. Today, they're treated the exact same. So there's no real blockers. But what I'd want to see is security tokens being favored. And I think we're actually going to see that inversion happen at some point in the future. It might be, it might be 2 years, it might be 5 years or something like that. But regulators are going to start to recognize, okay, yeah, this actually is way better for us. People can more easily follow regulations. Let's loosen restrictions and encourage people to issue securities on blockchains rather than, in closed environments like the past.
Got it. Yeah. So next question, Crypto 9719. The question is, why did Polymesh decide to build specifically to support security token? I guess the motive behind Polymesh. Yeah,
it's the biggest market in the whole entire world for blockchains, we think. We still don't know what's going to happen 10 years from now. Someone's going to figure out some killer app for blockchains. But for us right now, the biggest app, the most exciting use case by far is getting financial securities on blockchains. The utility token market right now is, I haven't looked at CoinGecko in a while, or CoinMarketCap. Let me see what we're looking at here today. Market cap, $800 billion. So we're under $1 trillion. One bond can dwarf the utility token market in 1 second. There are potentially trillions of dollars of bonds sitting out there that are waiting to be tokenized by governments around the world, by large corporations around the world. The securities market is trillions and trillions of dollars, and some people would estimate quadrillions if you get into derivatives. Utility tokens, I don't think will ever be that big. And so it's the largest potentially addressable market, and there aren't really that many players in the space still. That are focused on securities. It's a lot easier to make a quick buck, in the utility token world. But long-lasting instruments that people want to own are going to be securities. People want to own equity of companies. People want to own debt. And that's really where we see blockchains going. There's still going to be tons of utility tokens. There's still going to be really, really cool and interesting protocols that get developed. There will be things that, we can't even imagine yet that get created next year and 5 years from now. But the backbone of the financial world of investments is stocks and bonds. Security tokens enable really cool other things as well. Fan tokens, revenue share agreements that previously didn't work because it was too expensive to create them, and now they're cheap enough to do so. But that's really the backbone of the world of finance, and we want to be the infrastructure that supports all of that.
Awesome. Yeah. So I think I already saw a lot of great questions coming in from the chat, and really thank you guys for this amazing engagement. So yeah, if you're looking at the Binance Live, the questions have been like one question per second. I wanna quickly choose one of the questions that I think would be a good that I could would be a good follow-up question to the last. So regarding like, so this is actually, so this question is not a pre-collected question, it's from the chat. But then we'll jump back to the live, to the pre-collected questions. So I think after what you mentioned with the security token application for Polymesh, are there any like metrics or use cases that are currently used on Polymesh, or like, I think the question here is the achievements, and then what are like the future development plans? And I think one question for myself is, what are like the success metrics for Polymesh?
Yeah, definitely. So in terms of success metrics, I think there's three big ones that we focus on at Polymesh. One is dollars worth of assets created on chain. And then the next one is the number of assets created on chain. And the third one is the number of users on chain. So, we want that number of assets created on chain to be, hundreds and thousands, then millions. Right now it's at 19. So Polymesh is a 1-year-old blockchain. When we were talking to institutions earlier in the life cycle of Polymesh, they just wanted to make sure it worked at first. And so we made it through 1 year, 0 security vulnerabilities, which is really huge for us. Obviously, security is huge, and that's a really big concern for financial institutions. Are we able to use this infrastructure for securities, and will it be secure enough for our use case? That was a huge question that they were asking themselves. I think we proved that after 1 year, and we have seen 19 assets get created. In terms of the dollar value of those 19 assets, we aren't totally sure yet. It's probably going to be in the couple $1 million range for those 19 assets. And then one thing that we've actually had that's been pretty big recently was an integration with Stably. So Stably is a stablecoin provider. They have a USD stablecoin, USDS. So they're actually very close to being onboarded. So they'll be probably the 20th token that gets created, unless someone creates that in the next few weeks. And so that will be, hopefully millions, tens of millions, hundreds of millions of dollars eventually of people who want dollars on the Polymesh blockchain. And then in terms of users, at this point in the 1 year mark, we're a little over 3,000 users that have onboarded. And so we think that's actually pretty good in terms of success for a 1-year-old blockchain, where we have this really hyper focus on institutions. We've still seen 3,000 individual users on board. And the interesting thing about users onboarding to Polymesh is they've all passed the KYC process. And so sometimes we see layer 1 blockchains go, oh, we have 100,000 users, we have 200,000 users. You have 100,000 accounts on the blockchain. That could be associated with 10 users who have just been spamming account creation so that you can get your metrics up. We have verifiable proof that 3,000 unique individuals have actually onboarded and gone through a KYC process. So that's really, really cool for us to be able to claim that, I think. In terms of future development plans, a lot of what we build has to focus around and is centered around ensuring that institutions can properly onboard and that they have everything they need to do so successfully. So I mentioned Stably, I mentioned Tokenize earlier as well. So a lot of development that we've been doing in the last few months has actually been building things for them specifically. Stably needed something in terms of memos specifically for security token transfers for their stablecoin. Tokenize wanted some specific work done on portfolios so that they could create infinitely many portfolios that are represented essentially as client assets on their exchange. And so that's a lot of what our development is focused on. In terms of big roadmap items, everybody always wants to know what roadmap, when roadmap. One big thing that we have been working on is NFT support. So you could, of course, create a security token today on Polymesh or whatever, let's call it an NFT token. You create the supply of one. And yeah, that could be an NFT, but it's not a very great solution. Of course, people want to create a collection of 1,000 photos or 1,000 mortgages or 1,000 individualized bonds that are then represented in a portfolio. So our NFT support, even though, yeah, you could use it to create, monkey JPEGs if you wanted. Again, we're taking this hyper-targeted approach of how can you create NFT support for, mortgages, bonds, a specific piece of real estate, any financial securities that are represented and that have to be unique in a one-of-one type scenario. So we've been working on that. We're hoping to get NFT support launched very shortly. And then the other one, again, is Mercat that I mentioned. So our confidentiality solution, still researching that, still ensuring that we can implement that when the right time comes. And so, yeah, I'd say those are sort of the two big roadmap items on top of ensuring that we can support those financial institutions.
Awesome. Yeah, so I think you already touched on some of the answers with the follow-up questions. So yeah,
I think I still should touch on this. But yeah, introduce the question, please, Larry.
Yeah. So James, thanks for the question. This is one of the pre-collected questions. Any plans for an NFT marketplace?
So for us, we likely would not offer an NFT marketplace. We would want an OpenSea or a company like that, or whoever's building NFT marketplaces these days. There would be a company who would build an NFT marketplace on top of Polymesh, and Polymesh would provide the base layer infrastructure that makes it easy for them to create, manage, trade these assets. So we specifically wouldn't offer an NFT marketplace, but we would enable an NFT marketplace to get built on top of Polymesh.
Okay. And then I see this question has been asked several times. So thanks for the question, but please don't copy other people's question. We'll still try to source there are timestamps on the questions. So please be ethical, respect other people's questions. But the question I think is a very good question. Have you already made partnerships with stock exchanges?
Nothing explicitly in terms of any stock exchanges, but that's one of the routes that we want to go. Right, is one thing we've been working on very intensely for the last, let's call it 6 months to a year, is a lot more entities like stock exchanges. So stock exchanges, broker dealers, large banks, custodians. They've all been putting out a lot more RFPs. For people who don't know that, that's a request for proposal. So a bank goes, hey, we're interested in this blockchain thing. Finally, we weren't really sure about it, but we want to start doing something like a proof of concept to see if security tokens work. We want to potentially issue an asset. And so they put out a request for proposal, an RFP, and they go, who would like to help us build this? Banks don't necessarily want to build all of the technology themselves. They might want to use a leader in the field like Polymesh. We've seen a lot more of those recently coming out from entities like stock exchanges. And we're pretty close in the running for a few of these RFPs. We can't talk about any more than that. But yeah, we've been very close to a few companies like stock exchanges where we are hoping to be their technology provider and their base layer blockchain that they use.
Yeah, so I just want to share something quick from my end. So I'm based in Taiwan, and I think Taiwan passed the STO laws a while back. But I don't know the technical details, but they set the requirements to be very, very high. Like you have to become you have to be a accredited investor in order to invest in STOs. Of course, STOs, they're more of a launch pad for smaller companies, right? But then the investment amount is so small that the accredited investor, the requirement is super high, but the investing amount is so small that it doesn't make sense. So the first 2 years, there were 0 listings. But I think that's something that's also quite interesting, in terms of when you're looking for so are these kind of government bodies the partnerships that you're looking for, or more stock exchanges, or how would that partnership work?
Yeah, it's more of the companies. So in terms of governing bodies or regulators or whatnot, we haven't really seen them do any of those kinds of things with blockchains. Well, one question that we get all the time is Polymesh an SEC approved blockchain? Something like that. That's not really how the SEC works. That's not how really any regulator that we've seen work. Even the MAS in Singapore, they don't do that kind of stuff. They do have sandboxes and things like that where they say, we're not going to sue you and we're not going to stop you from operating. But what happens is a company issues an asset. The asset could be on Polymesh. It could be a piece of paper. It could be a napkin. It could be in some type of closed end infrastructure in the legacy world. And then if they violate some regulations or rules that the regulator has, then the regulator sues them, or the regulator issues them a cease and desist, or the regulator fines them. And so there's no real, green light process for blockchains or for any specific technology for that matter. Really what happens is you build something that you think meets the compliance criteria for a specific jurisdiction, and then someone uses it, and then the regulator, either says, yes, this offering is fine and we're not going to sue them, or the regulator sues them and issues a cease and desist. So it's really this ad hoc ongoing basis where conversations with regulators are important. And, we have had those conversations. But personally, who we work with are these companies like stock exchanges, custodians, broker dealers, transfer agents, because that's who brings the assets. You mentioned 0 STOs done in Taiwan. I think the problem with STOs, and I guess we're guilty of this as well back in 2017, 2018, is we thought everyone's going to start issuing STOs. Every mom and pop business, people are going to tokenize their bicycle and whatnot. But with the world of financial regulations, it's very costly to do a securities offering. It does cost a lot of money. Where I do see STOs taking off potentially are in jurisdictions where the capital markets aren't yet formed very highly. So Southeast Asia, Africa, potentially jurisdictions like this, where people do want to tokenize their farm, where they have 1,000 animals or something like that, and that could make sense because then that farmer can raise some capital up front, and then they can make dividend distributions to someone who invested in them early. But we just haven't really seen that take off. And what we have started to see now is banks who want to issue a $100 million bond do it with blockchain. HSBC put out a report, this was maybe a year or two ago, where they believe that the bond origination costs can be brought down by, I think it's over 90% if you use security tokens. So that to a bank is massive. And the banks and the custodians and the broker dealers, that's where the assets are. It's not really the farmer who has this amazing offering that everyone in the world wants to buy. It's a bank who has a $100 million bond offering that has been vetted by their internal team, that has the appropriate coupon rate that's very great, that's been made to be appealing to the broader investment community. That's where the assets are, and so that's what we want to build technology for. And we are going to see the farmer, we are going to see the person tokenize their house. But what's really exciting to us is $1 billion, $10 billion, $100 billion, $1 trillion in assets, and the banks are where those assets live.
Yeah, a quick question. So where do you think this is going to take off first? Like regarding which countries, which jurisdictions, or even which asset classes do you think we'll see mass adoption for Polymesh first, or adoption for Polymesh?
Yeah, real estate has been a huge one recently. So I'm actually an advisor to a company called Red Swan. They've tokenized $2.5 billion in assets. And so they've done that with the ERC 1400 technology that Polymesh initially created. And then we're obviously hoping to migrate them over to Polymesh. So that's the largest tokenization to date by any entity. So $2.5 billion. That's been really cool to see. Real estate's been a huge one, largely because the existing infrastructure is very slow. To get a deal done in real estate, here's generally how it works. I own a $100 million building. I want to sell some of it. I want some cash. I want to go, hang out on a beach for a while. I've worked for 40 years. I have my $100 million building. I'm ready to retire, but I don't want to give up all of my equity in the asset. I have to talk to Blackstone or Starwood. I have to talk to one of these gigantic companies that exist, because any smaller than $50 million for a deal, and they won't touch it. They just don't care. They can't be bothered to put their teams on analyzing these deals that are less than, let's call it $20 million, $50 million. And so there is no market below the $50 million, $100 million threshold for especially commercial real estate. So if you want to invest in real estate, you really have the option of buying your own house, maybe buying a small property by getting levered up with debt through a bank, or I have to buy a REIT on a publicly traded stock exchange where the fees are very high and the managers make a ton of money, but investors don't necessarily always make out really well. So what the owner of that $100 million building can do now is they can chop up their entire building into very small fractional units, and they can sell it on a marketplace like Red Swan, for example. There's another company that's building on Polymesh called ABC Tokens, doing very similar things with real estate. So investors can now purchase, $100 of an asset, $1,000 of a real estate asset, and receive that, 7, 10%, 15% coupon that's getting paid with the rents that are being offered there. And so this new market of real estate that's been enabled by blockchain, because the costs are so low to create and manage these assets, that's a really exciting thing that we've been seeing. The other one is debt, I mentioned. So really the only offerings by major institutions to date with security tokens have been debt offerings. There really hasn't been the equity offerings. And it's because debt origination costs are so high, and you can bring those down a lot if you use something like security tokens. And so for Polymesh, we see real estate and debt as two huge use cases. there's going to be things that get created that, we haven't even thought of yet. And hopefully we're going to start seeing that. Tokenize is one of those. They're really excited about fan tokens. So the example that Tokenize used was, imagine if you could buy part of Lewis Hamilton's future revenue stream back when he's a go-kart driver. That's really exciting stuff. You could buy part of Rihanna's income that she's going to make over the next 10 years. You can buy it right before she blows up. So all that kind of stuff is really, really interesting, and that's what we see happening as well.
Yeah. I think a lot of back in 2017, a lot of the projects wanted to tackle this problem, but they didn't quite have the right suite of tools. So this could be a platform where they could do where they could realize that. So all right, aware of the time. Do you have a hard stop, by the way?
I'm good. Let's go for 10 hours, whatever you want to do there.
All right, let's go for it. Let's go. No, just kidding. So I'll try to go through the rest of the questions. And so for the people in the chat, thanks so much for tuning in and streaming with us. At the end, we have a prize quiz session. So right now I'm mixing up the pre-collected questions and the live chat questions. So I thank you guys so much for the questions. They're very quality questions. I think one of the questions you already answered, but I wanted just to bring out real quick. So you mentioned Stably, right? So Shifat09, thanks for the question. So could you explain more about the stablecoin?
Yeah, absolutely. Yep. So Stably is a company that I mentioned. So they've been working on integrating Polymesh for their USDS stablecoin. So US dollar-backed stablecoin, works similarly to Circle, Tether. I send $1 to a bank account somewhere, I can get $1 printed on Polymesh. And so that's really exciting to us. What's also really exciting is something called payment receipts. And so I don't believe this functionality really exists on other blockchains, because other blockchains aren't built for this one use case. They're built for kind of all things to all people. Whereas we're saying, okay, what do banks need? What do custodians need? What do broker dealers need? What do investors in financial assets need to engage in this ecosystem? And so what you can actually do on Polymesh is you could have a wire transfer that goes somewhere. You could have a credit card payment that goes somewhere. You can take that, you can throw that information in a standardized way on chain on Polymesh, and you can actually affect a security token transaction. And so what that enables is now banks don't necessarily have to touch a stablecoin to interact with blockchain. Stablecoins have been a really big sticking point for a lot of banks because they don't necessarily know how they're regulated. There are some regulations that are trying to get pushed through in various jurisdictions, but a lot of them just go, you know what, this is a question mark. It's a little bit too concerning for our risk department. We can't touch stablecoins. And so what we say is, okay, that's fine. Send a wire payment somewhere, take that wire payment information, throw it on Polymesh as a payment receipt, and then that can affect the transaction of a security token from party A to party B because they paid, their $10 million for it or whatever the case may be. And so stablecoins are important. We're very excited about onboarding that, but we're also very excited about things like payment receipts, potentially using other blockchains as the cash leg of settlement is very important. So again, Polymesh, best settlement engine on the market. You can use other blockchains as the cash leg of settlement and Polymesh as the securities leg of settlement. So a lot of really interesting ways that we can do there, and very modular, and using whatever a bank needs to do, we're there for them.
Thanks. And also, so like I mentioned, don't copy other people's question. I think Canvas Gangster mentioned that some of the questions were copied, but we'll check the timestamps anyway. So if it's not your question, just don't post it. Try be original. But going further into that question, what's the difference between like onboarding existing stablecoins, BUSD, USDT, USDC, from issuing your own or partnering with Stably?
Yeah. So really for us, it's just about, who's excited about doing it. We definitely talk to USDC, and we definitely talk to Tether. We really like Stably's approach. We've seen Stably take an approach in a very long-term, sort of, let's call it, collaborative approach with other blockchains as well. And we liked what their team had to offer. We liked their time that they were able to get set up and to start working and getting deployed. If BUSD wants to come on Polymesh as well, that's definitely a conversation that we could have. In terms of us issuing a stablecoin, that's not really our bread and butter. We're the best providers, I think, in the world building a layer 1 blockchain for security tokens. If we start trying to get into, let's create our own stablecoin, let's do this, let's do that, losing the focus and the hyper targeted nature of our project, I think would be a detriment to us.
Okay. And then we have some questions regarding tokenomics. So whether it's coin burn, buyback, could you spread some, could you give us some insights on the tokenomics for POLYX?
Yeah, for sure. So as I mentioned, POLYX is the native protocol token of Polymesh. So you use it to pay for transaction fees. You can use it to engage in governance. So you can create a Polymesh improvement proposal to do things that get affected on chain for upgrades. You can also use it for staking, so you can get staking rewards as you stake on node operators. In terms of coin burns and buybacks, so it's actually a very interesting question. I'll start. So POLYX is actually designated by FINMA, which is the Swiss financial regulator. So SEC in the US, FINMA in Switzerland. POLYX is actually designated as a utility token. And so they have 3 buckets there for assets. They call things securities or assets, payment tokens, or utility tokens. And so having that utility token designation is very important because it allows you certain freedoms. It allows you to build a blockchain in the way that I think it should be built, very decentralized, having the ability to do a lot of different things for a lot of different people. When you have something like a coin burn or a buyback system, that looks very security-like to regulators. And so that's something that we have definitely shied away from and that we almost certainly would never implement. I understand why some projects want to do that, and it makes a lot of sense for them. But for us, being very, very hyper focused on regulations, POLYX achieving that utility token status in Switzerland, that's something that we almost certainly would never do.
Got it. And then, I think there were also some questions regarding like the hard cap and the issuance, inflation, or the token distribution. Could you shed some light on that?
Yep. Yeah, for sure. So the Polymesh Association, actually, I'll take a step back. I don't even think I mentioned this yet. So initially, Polymath, the company, created a token called Poly. That was an ERC20 token on Ethereum. And then what you could do with Poly, once Polymesh got set up, is you could take a Poly token, you could go through an upgrade bridge that would lock the Poly on the Ethereum side, and it would mint an equivalent amount of POLYX on the Polymesh side. So if I had 10 Poly tokens, I could go through the upgrade bridge, lock my Poly there. It's locked forever. I do not have access to the Poly, but I get 10 POLYX on Polymesh. So I can use Polymesh, I can create security tokens, I can stake my POLYX, etc. And so throughout that process, the Polymesh Association has roughly, let's call it 200 million POLYX. All other POLYX is owned by independent parties. In terms of tokenomics specifically, anyone can go to polymesh.network/tokenomics, but there's also polymesh.network/POLYX. So that's our website. You can look up all the information there. POLYX, again, used for transaction fees. 80% of transaction fees go to the Polymesh Association's network treasury, and 20% go to the node operators on chain. And then, yeah, in terms of other information, feel free to go there. For the supply growth specifically, there's a calculation that gets created based on the amount of POLYX that exists and the staking percentage. And so it's way too confusing to go into here, but you can see we've got some nice graphs and whatnot that you can go check out on the tokenomics page. The important thing to note is it's roughly, I believe, around, let's call it 10 to 20% per year supply growth right now. And staking rewards are more than that. So actually, if you stake on the Polymesh blockchain, you actually get paid more than the supply growth. So that's actually something nice in terms of rewards there. And then finally, supply growth, once POLYX has a supply of 1 billion, so I believe it's around 500 million or so right now. Once POLYX hits a supply of 1 billion through staking rewards, supply growth will always be 140 million POLYX per year. So as time goes on, supply growth decreases every single year, every single second, essentially, right? So it's 140 million in year 1, which means 14%. But then in year 2, supply is 1,140 million, but supply growth is still only 140 million. So supply growth decreases every single year based on that calculation.
So staking APR is higher than the supply growth because
Correct.
Staking also has the commission from not commission, like the transaction fees, right?
Yeah, and also not 100% of tokens are staked. right? And so
yeah.
whoever's staking is receiving more rewards than the average supply growth. Yeah.
Got it. And then after that, it's after it reaches $1 billion, and then it's 140 million per year.
Correct.
Is there like a hard cap, or it just keeps going up?
There's no hard cap today. That's not something that we've implemented. Again, anyone could create a Polymesh improvement proposal and suggest that and try to propose that and bond some POLYX to do so. But yeah, today, no hard cap.
Okay, cool. And then I think, we're already 4 minutes past 10. Or, I mean, at least in my time. Let's, I guess one of the questions that a lot of users asked recently is Polymesh exposed to FTX or the contagion in any terms?
Yeah, Polymesh is not exposed to FTX in any way. So we've obviously talked to them as an entity back in the day, talking about security tokens and whatnot. But yeah, in terms of Polymesh Association Treasury, not on FTX. Any funds that we've ever had, never on FTX. Business relationships, never with FTX. There's one entity. I'll just be fully transparent. There's one entity that has been named in the FTX bankruptcy that is a node operator on Polymesh. We've reached out to that company and we've said, hey, we saw your name here, and they said, yeah, FTX owns 10% of our company or whatever. We're not even really sure why we're involved in this, but yeah, that's the only link whatsoever. Is one node operator, I think, is 10% owned by FTX, and they don't expect any serious fallout in terms of the bankruptcy restructuring with FTX. So yeah, essentially Polymesh, no relation at all to the FTX debacle that we've seen.
Okay. Well, that's good to hear. I think that's good question to wrap up the live questions plus the pre-collected questions. I know you guys have submitted so many questions, so maybe we have to do a second round sometime when we probably have you have another update so to tell everyone. So this time for the next section, I'll go into the prize quiz. So I'll present a quick pitch deck just to go over what we've talked about, and then we'll have a prize quiz session. 1 second. Okay. Can you see my screen? Yeah. Okay. Good. Perfect. All right. So yeah, thanks a lot for answering so many questions and some, I think, more technical questions, Graeme. You've been amazing. I'll try to recap it in my own words through this presentation. Feel free to jump in and correct me if I'm wrong. So take good attention here, guys. A lot of the key points here will be questions in the prize quiz. And for the prize quiz, we will have a set of new rules. So we will have a prize pool of $2,000 worth of POLYX. And then there will be 3 questions today. So you have to answer, it's a multiple choice, but you have to type in the choice plus the description. So for example, if it's A, Bitcoin, B, blockchain, C, whatever, you have to type in, if the answer is A, you have to type A and then Bitcoin. They have to type the whole answer in order to be eligible. So yeah, I'll cover the rules later on. I'll just go through the deck real quick. So POLYX or Polymesh is a layer 1 institutional grade blockchain built specifically for security tokens. Okay, so it's built for security tokens. And this is just a quick description on what a security token is. And then Graeme also has mentioned, you can stake Polymesh. The current issuance is around 14. That's after it reaches 1 million, right? So do you know the current APR for staking?
Yeah, for staking, I'll have to go pull it up, but let's call it 20%.
Okay. Yeah, so current staking APR is 20%. If you hold POLYX, yeah, it would be good if you would like to earn additional POLYX on that. So you can stake the POLYX. So that means that Polymesh is a proof of stake consensus network. However, POLYX itself.
Sorry, Larry. I'll jump in there. We're looking at 33% roughly right now.
33. Okay, that's even better. So
for the top performing operators, 33%.
Okay. Yeah. So for those that are interested in staking, feel free to stake there. But however, so POLYX is built for security tokens. However, it is classified as a utility token. The POLYX itself is classified as a utility token under the Swiss law. And then node operators, so this for the POS blockchain, can validate new blocks. Verified POLYX holders can participate in staking to help secure the network and earn 33% in POLYX. And if you want flexible earns on simple earn, so this is actually a question that I saw somebody brought up. Is there any other way to? I'll find your username. I already wrote it down. So thanks for the user for asking this question. Is there any other way to earn POLYX other than staking? Feel free to go to the Simple Earn website on Binance. So this is a earning product under Binance that is principal protected, meaning that the amount of tokens that you stake or the amount of tokens that you subscribe, we guarantee that we will return those at the end of the maturity date plus the interest. The interest from these products either comes from internal lending. So we have the Binance loan or the Binance margin products, which would require tokens, which would borrow tokens from the users. So where do we borrow those tokens? From the simple and flexible products. And we also have support staking for several of the networks and protocols. So currently we support the flexible staking. So that's mainly for the supply for loans and margins on Binance. So for those that are interested but want more liquidity, flexibility on your assets, feel free to stake or subscribe to Simple Earn. All right, so once again, we're going into the prize quiz session. Please do note, you have to type the entire, and for those that are streaming from YouTube channel, you can go into the Binance Live in the description link, in the description below, to be able to, and you have to be logged in order to participate. For the prize quiz, you have to type the full answer in order to be eligible, right? So if you think the answer is A, don't just type A and then the full answer itself. All right, so let's go for the first question. What consensus mechanism does Polymesh use? A, proof of work, B, proof of stake, and C, proof of time. Capital letter doesn't matter. So please type the entire, I'll give some more time since it takes some time to type. Okay. All right, I think most of the people got it right. And the answer is B, proof of stake. So for those who just kept typing the choices, you have to type B and then proof of stake. Okay. So yeah, I think a lot of people got it right. Perfect. All right, ready for the second question? So how is POLYX classified under Swiss law? A, utility token, B, security token, C, payment token. So, yeah, do note, POLYX, I'll explain more in the answer section. Okay, I see we already have a lot of answers coming in. So the answer is A, utility token. So POLYX is made for security tokens, but it itself is classified as a utility token under the Swiss law. And then again, you have to type the full answer to be eligible for the prize pool. All right, ready for the last question? What is Polymesh built for? I think this is a very free giveaway. So A, security tokens, B, the metaverse, and C, gaming.
I think I got 100%.
Yeah, if you didn't, I'm gonna tell everyone. Congrats. Okay, I think a lot of people got it right. So the answer is correct. A, security token. So congrats for those who got every one of the questions right. We will choose for those who got all of the questions correct, and we will randomly choose from the people who got the questions correct, and we will distribute the rewards within 30 days. And just to quickly introduce our new reward distribution. So we will distribute what's called a locked trial fund. So a locked trial fund is something that you could use on Simple Earn, the product I introduced. There will be a certain duration and interest that you can accrue during that duration. So for example, if it's a $20 worth of POLYX, you may get, just for example, throwing random numbers out there, you get a $10 worth of POLYX in principal, and then the other $10 you'll receive in interest. And then depending on the duration and the APR, which we will adjust according to how much interest and principal will be distributed, you will in total get $20, but it will be distributed in both the principal and the interest added together. And the rewards will be distributed within 30 days. Once you receive it, there will be a notification, an email, and an app push, and you can go to the reward center to redeem those rewards. You have to redeem it under 7 days, within 7 days, or the locked trial fund would expire. So for those who participated in our last AMA with Alpine, I think you should have got the AMA today, actually. No, sorry, not the AMA, the locked trial funds today. So yeah, you can go for those that participated in our last AMA, go to the reward center, and then try and find the locked trial fund, and then you can subscribe it to Simple Earn to start earning those rewards. Yeah, so I think that's a good that's about it. Good wrap for today's AMA. Oh, sorry, I actually accidentally share. Okay. Yeah, so thanks so much, Graeme. I think it was super informational. I learned a lot myself about both Polymesh, Polymath, and about you. So thank you so much for bringing such an informative session. I think it's lots of value for also our audience. In these market conditions, a lot of people don't know what to do. So it's good to get educated and prepare for the next market bull run. So wish everybody well, wish everybody safe. Graeme, any words, any additional notes you want to add?
Yeah, just thanks, Larry. It's been a lot of fun getting this set up and talking to you for over an hour now. It's been great, and big shout out to the Binance community. Amazing questions that you guys had. I'm always impressed with how many people are even watching this, and how many people were able to give great questions and then answer those questions correctly in the quiz. So yeah, just thank you, everybody. I had a really great time here, and yeah, I agree. We should probably do this again at some point. I'll just add as the final note here, go check out our website, polymesh.network, for all the other information. I know we talked about tokenomics, we talked about POLYX, we talked about a ton of things. A lot of information there that we probably didn't cover in the AMA today. And then go follow us on Twitter at Polymesh Network, and then you can go follow me at Moore Grams, MOORE. GRAMS. So yeah, thanks, Larry, and thank you, everybody, for tuning in.
And the YouTube channel too. So Graeme also has done a lot of AMAs in the past. So if you didn't get enough today, feel free to go to those to get more of it.
Yeah, you can go to YouTube and you can search Polymesh Network. Thank you. Larry is helping out on our marketing team now, I guess. So thank you, appreciate that. Good shout out.
All right, thanks, guys. Thanks everyone for tuning in. See you guys.